Hello and welcome to the Optimization Desk Market Update. I'm Rupa Manyanere and today I'm joined by Sarah Astley.
Yeah, hi, I'm Sarah, a Client Portfolio Manager on the Optimization Desk.
Okay, so at our last update, the market was bearish and prices were falling. Is this still the case?
Yeah, so overall prices have continued to decline. However, we have seen some volatility, especially with longer dated contracts. The summer 20 picture remains bearish. However, we could see some support in contracts further out. We've actually seen the market enter into contango, meaning that prices are cheaper, closer to delivery.
Why is this? Is this due to LNG?
Yeah, so LNG is obviously a main price driver and the main reason for the bearish outlook for summer 20. So we've got 65 billion cubic metres of new LNG supply due to come online in 2020, and this is compared to just 13 BCM in 2021 and 6 BCM in 2022. And the sort of the new supply levels due online in 21 and 22 fall short of expected demand growth.
Moving on to the pandemic we're currently facing, the number of cases of coronavirus in the UK continue to rise, and we're starting to see governments take drastic measures in an attempt to contain the virus. What has the impact been on the energy markets?
So as you know, the main outbreak's been in China, and China are the world's largest importer of gas and oil. So if we look at LNG, Asian demand was already lower this winter as they've had quite a relatively mild winter, and also they have sort of large storage levels. The outbreaks caused demand to drop further, and we've even seen Chinese LNG buyers attempting to invoke sort of force majeure contract clauses to divert them onto cargoes. Oil demand's also taken a hit, with China's oil demand expected to have fallen around by a third, and this has seen oil prices drop by over $10 a barrel over the last month.
Looking ahead, do you think that coronavirus will continue to push oil prices further?
Yeah, so over the weekend we saw oil prices very briefly dip below $49 a barrel, which is the lowest level we've seen since July 2017. This followed news that factory output in China slumped by its fastest pace ever in February. So that really shows that coronavirus is starting to hit output now in China. Oil eyes now will be on the OPEC meeting on the 5th and 6th of March to see what production cuts, if any, are agreed.
And obviously I expect our usual gas fundamentals to play a big impact looking at March. So at the moment we have 14 LNG tankers that we're expecting to be headed to the UK, and obviously with the outbreak that's going on, we might see more LNG headed towards northwest Europe as a result. We're also expecting two coal plants to be officially shut down at the end of March as well. And then alongside this, we also have the UK budget, which will be on the 11th of March. So we expect to see some volatility in the pound, and also as a result of the trade negotiations between the EU over Brexit as well. So that is it from the Optimization Desk today. Please follow us on our social media pages. Follow Ben Spry on Twitter and LinkedIn. Thank you for listening.
Thank you.